$82 billion. That's what Texas local governments collected in property taxes last year. The same year, Greg Abbott signed a $51 billion tax cut and called it the largest in American history. That's what Texas just did to property taxes. And the governor is now telling crowds in Fort Worth he wants to abolish them entirely. Here's the problem. There is a specific tax rate, published by Texas's own Business Research Council, that proves Abbott's math does not close. There's a school district in Austin right now firing 215 teachers and writing a $604 million check back to the state. And there's a number buried inside the November ballot that already shifted billions in tax burden from one group of Texans onto another. Stick with me because by the end of this video, you're going to know exactly which side of that shift you're standing on. On November 4th, 2025, Texans walked into the polling places and approved every single one of the 17 constitutional amendments on the ballot. Property tax relief was the headline. Proposition 13, which raised the school district homestead exemption from $100,000 to $140,000, passed with 79.41% of the vote. That's a 2.3 million vote landslide. Proposition 11 stacked on top of it, lifting the additional exemption for seniors and disabled homeowners to $60,000, which combined with Prop 13 means a Texas senior can now shield up to $200,000 of their home's value from school taxes. Lieutenant Governor Dan Patrick told voters in a campaign ad that the average senior homeowner will never pay school property taxes again. The owner of a typical $302,000 Texas home is going to save roughly $500 on their school tax bill. That sounds like a win. Here's the part that didn't make the campaign ads. The total cost of the 2025 relief package, Prop 13, Prop 11, the new business personal property exemption under Proposition 9, the rate compression money, is $51 billion over the next 2-year budget cycle. And yet, Texas local governments still collected $82 billion in property taxes in 2023. That's equal to every single tax the entire state government brings in: schools, cities, counties, and special districts. The bill didn't shrink. The state government just agreed to pay a slice of yours for you, with money that has to come from somewhere. That somewhere is the question Greg Abbott has been answering on the campaign trail for the last 6 weeks. On December 4th in Fort Worth, Abbott stood up in front of a crowd and said this, and I'm quoting him directly: "Your home should not be the piggy bank that is raided to pay for public schools." 6 days later, in Westlake, he took it further. He said the time has passed to make abolishment a reality. He said Texas's roughly $11 billion annual budget surplus is enough to make that happen. And on the question of how he plans to replace $82 billion in lost revenue without raising another tax, the governor was direct. He said there's no reason to raise the sales tax. He said a sales tax hike is off the table. He said he has the money right now. The plan has 5 parts. Eliminate school property taxes for homeowners through a constitutional amendment. Cap appraisal growth at 3% on every property in the state. Require a 2/3 vote of the public for any property tax increase. Limit local government spending growth to population plus inflation, or 3.5%, whichever is less. And let any 15% of registered voters force a rollback election. Abbott is going into his 2026 re-election bid with roughly $100 million in campaign funds behind him. This is the centerpiece of his pitch, and it sounds incredible until you look at what the Lincoln Institute of Land Policy and the Texas Comptroller's own data actually say about whether the math works, which is where this gets uncomfortable. If you're a Texas homeowner, a Texas renter, or you're watching from another state because your governor is starting to talk like ours, you need to see what comes next. Hit subscribe and the notification bell right now because the numbers in this next section are the ones the campaign ads will never put on screen. The Texas Taxpayers and Research Association is not a left-wing think tank. It's a business-aligned policy group whose members are some of the biggest corporate taxpayers in the state. In August of 2024, they published a research report titled, "Should We Eliminate Local Property Taxes?" And the answer they came back with, using the comptroller's own numbers, is a number every Texan needs to memorize. To replace the entire $82 billion in local property tax revenue with the sales tax, Texas would have to raise the combined sales tax rate to 19.27%. That's 2.3 times the current rate. That is higher than the highest combined sales tax rate in any state in the country today. A quarter on every dollar you spend at the grocery checkout, at the gas pump, on a car repair, or a new water heater. Now, Abbott is not proposing to eliminate the entire $82 billion. He's proposing to eliminate the school portion that homeowners pay. The Legislative Budget Board calculated that eliminating all school district property taxes in 2023 would have cost the state $39.5 billion. The homeowner-only slice is roughly $17.5 billion a year, and the governor's plan is to cover it with a budget surplus. Here's the problem with that. The $11 billion annual surplus the governor keeps quoting was built on two things that aren't coming back: federal COVID money and inflation-driven sales tax growth from the post-pandemic spending boom. The state's own budget watchers have described those surpluses in writing as an anomaly. You can't fund a permanent $17 billion hole with a temporary $11 billion windfall. The math doesn't close. Anyone telling you otherwise is selling you something. So if the surplus runs out, and it will, the replacement money has to come from somewhere. And this is where the punchline lands. Texas already runs the seventh most regressive state and local tax system in the United States. That's not our opinion. That's the Institute on Taxation and Economic Policy, 7th edition, January 2024. In Texas, a household earning over $744,800 a year pays 4.6% of its income in state and local taxes. A household earning under $21,700 pays 12.6%. That bottom 20% pays 2.7 times the income share the top 1% pays. Property tax in Texas is regressive. Sales tax is more regressive. Swap one for the other, and you make the gap worse. Now, stay with me because here is where it gets personal. Consider a renter household pulling in $40,000 a year. They spend roughly $20,000 of that on taxable goods. Today, they pay around $1,650 a year in sales tax. Under a full replacement plan, they would pay roughly $3,850 a year. That's over $2,200 more every year for a homestead exemption benefit they'll never see because they don't own a home. And there are 4.3 million renter households in Texas. And wait, it gets worse. The owners of those rental properties, the apartment complexes, the institutional landlords, the build-to-rent communities, they're not paying school property tax on a homestead either. There's no homestead exemption for an investor. So when Abbott's plan kicks in, it cuts the tax on owner-occupied homes and does nothing for the rental side, which means the renter pays more in sales tax. The landlord pays the same in property tax, and the property tax burden on commercial Texas, apartments, shopping centers, office buildings, doesn't move $1. And here's the take that's going to make some of you angry. Abbott's plan, as written, isn't a tax cut. It's a tax transfer from homeowners to renters, from the middle class to the working class, from individuals to the state's general fund. The total bill collected by local Texas governments does not go down. It just gets relabeled. Tell me in the comments below if I'm wrong about that. If you're a Texas renter, we want to hear from you. If you're a homeowner who thinks this is a fair trade, we want to hear from you. Like the video if you've never had this explained to you on television, because the algorithm is the only reason a video like this gets in front of the people it needs to reach. Now, that brings us to the part of this story Texas school superintendents have been screaming about for 2 years, because all of this is happening to a school finance system that is already cracking. Austin Independent School District, May of 2026. Superintendent Matias Segura goes in front of the board and announces a $180 million budget deficit for the 2026-27 school year. 215 full-time educator salaries are being eliminated. 85 at elementary schools, 51 at middle schools, 79 at high schools, 10 campuses already closed. Central office staff cut by 20%. And here's the historical benchmark. The last time Texas school districts were laying off teachers at this kind of scale was the budget crisis that followed the 2008 housing crash, when the state cut more than $5 billion from public education. We're doing this again, but this time with a roaring economy. And while Austin is doing all of that cutting, the district is also writing a $604 million check back to the state under the Robin Hood recapture system. Of the $171 million Austin voters raised through a 2024 tax rate election, $130 million was clawed back by recapture. They voted to fund their own schools, and 76 cents on every new dollar went to the other districts. This isn't an Austin-only story. Fort Worth ISD is closing 18 campuses by 2029. Judson ISD in San Antonio voted to eliminate 536 positions. Crystal City ISD cut a quarter of its workforce. Texas teacher pay is now $8,500 below the national average, 29th in the country for the third straight year. And we're about to add a hole worth somewhere between $17 and $40 billion to the system that funds them. So when Abbott says the state will fully fund public education, the question every Texas parent should be asking is, with what money? Here's the part that should keep you watching the next 2 years closely. Florida is running a parallel play right now. Governor DeSantis called a special session on May 27th of 2026 and proposed raising Florida's homestead exemption from $50,000 to $250,000 on a phased schedule with a legislated path to full elimination. And it's on the November 2026 ballot. But here's the critical difference. DeSantis explicitly carved school funding out of his plan. Florida's bill protects schools from the cut. Texas's plan, the one Abbott is campaigning on, explicitly targets school property tax. Same playbook, two completely different victims. North Dakota tried full abolition in 2024. The voters rejected it. The opposition campaign in that state, called Keep It Local, raised $1.89 million against just $28,000 from the supporters. And the ballot still went down. What that tells you is that when voters actually see the line item, when they understand which schools close and which teachers leave and which roads stop getting paved, they pull back. Texas voters in November of 2025 didn't get that line item. They got the headline. If you want to know what happens when the surplus runs out and the bill actually comes due, that's in the next video. We're going to pull the exact 10 Texas school districts most exposed to budget collapse over the next 18 months, and the dollar figures behind each one. What's happening in Texas right now is the largest tax shift in modern American history, dressed up as a tax cut. And the only question that matters is which side of the shift you're standing on. Subscribe and hit the notification bell so the next video lands in your feed the moment it drops. And watch this one next. We'll see you next time.